Okay, so S&P on the daily. We did have a little pop this morning to retest the breakdown level. And you see support, 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 became resistance and acted as resistance today. So from this point forward, we need to assume that this 1050 area is now a resistance. So we can we've got the green light to short against it, but if it breaks it, if it gets up to 1060, 1070, I mean, you got to stop out of it. But until that happens, I'm going to say we've got the green light to short against the 1050 level, and we're looking for our target. We do have some minor support. Actually, we already broke that. I'm trying to look and see where this actually turned. So it's looking like these previous highs here acted as support. So they should be knocked out now and should not be an issue in the future. So assuming this previous support holds as resistance, which I think it's going to, this support level, which was weak because it had already tested it, should be basically out of the equation for now, which means we've got a pretty clear shot down to the 945 area, where we've got another support level here. These previous highs will act as support, and beyond that, this little low here will act as support. So these are the next two levels of support that we're really paying attention to, and we've got the risk to reward right now, given this previous support holds as resistance, will be basically a move down to the 940 area. So here's your reward on the short side, and our risk is, like I said, once it gets to 160, 170, we almost got to call it quits. Okay, so let's talk a little bit about what's going on in the housing market, why home sales dropped off, and see if we can get a feel for what's happening there visually. So I'm drawing a graph, and I'll let you know when I'm finished what it all is. So we've got a supply and demand curve here. The lower X values are 0 to 100% quantity. The Y value is 0 to 100% dollar value. So the numbers are fictitious here. They don't really matter. But 0 to 100, if you want to call it 100,000, 100 million, 110,000. So this top number would be $1 million house or whatever. And the quantity on the market, you could call this millions or whatever. So this could be 100 million houses sold. So your demand obviously is, if the price is high, you're not going to want to buy very many houses. And as price comes lower, the demand curve slopes down. So the people want to buy more houses at lower prices, and the supply curve is the opposite. If the prices of houses are low, people don't want to sell their house And as price goes up, if the prices of houses are high, people want to sell a lot of houses. And so somewhere in the middle they meet, and where they meet is the balance of the sales. So what just ended here? The home buyer's tax credit. So what the credit did essentially was it reduced the value of homes. So let's say this was $100,000 home. If you got an $8,000 credit on it, you could have bought it for $92,000, basically. So somewhere in the middle, this demand curve changed because they were getting a tax incentive for buying the house. So the demand curve shifted to the right a certain amount. I don't know what that amount was, but I'm going to represent it by this second line here. So what did that do to the cost of houses? If the supply stayed constant, the cost of the house went up. And now with the tax incentive is gone now, so what's going to happen to housing prices now? It's going to come back down to where it should have been without the tax incentive, and the supply on the market is going to get reduced. So basically what I think is happening here is the price of houses stayed elevated at this level here when the tax incentives were acted. So without the tax incentive, the demand curve shifted pretty much instantaneously down to this first level. So the demand curve is down here where the prices are still up here, and basically the supply needs to adjust their prices to meet the demand now, and that process is not going to be instantaneous. So we've got essentially the shortage, the reduction in home sales basically was this amount here in between where the prices were and the prices are currently. So this area here was that shortage, that reduction in the home sales, and the supply needs to lower their prices now. And that's some of the mess you get into when you get government intervention. Is it's not an efficient market then, because there's always something changing. Things need to adjust for the new conditions. So essentially, housing prices are going to fall in the near future. And when housing prices fall in the near future, I got a feeling there's going to be a lot of fear about housing prices falling. But it's really just the market catching up with the lack of tax incentive that it used to have in the market. So if you're on the market for a house right now, I don't think now is the opportune time to buy. You need to wait until prices adjust to accommodate for the lack of tax incentives now. And if they reinstate the tax incentive, then the taxes are basically making up this difference. So either bring the tax incentive back or wait for the prices to fall. So I would not be looking at buying a house right now, but soon. I don't think it's going to take that long for housing prices to come down.